Welcome to Trading HT. Let's analyze together AT&T. Is it a good time to buy the stock? Is it a good dividend stock actually? Let's analyze it together. But first of all, guys, read the disclaimer right here in the video description below. And I gotta tell you, I'm really surprised by the performance. If we go to the daily chart, you can clearly see, like right on the bottom right corner of the screen, 29% year to date. It's amazing because in the past it's like in 2023 it suffered a lot, in terms of performance. But if you activate the dividend in the price, because right now we're watching the price and in the weekly chart, and you may think, okay, in 1999 the stock was trading at $44, so it's not a good time to buy the stock. Maybe it's like in terms of performance, it's not a good one. But obviously, we activate the dividend. Look at that. I mean, wow, a completely different story. Obviously, there may be like better stocks, such as Google in terms of growth and so on and so forth. But here is not bad at all. And actually, if we activate, for instance, the performance, let's see, from 2002 till today, we're talking about 400%, including the dividend. Still, it's not like the telecommunications sector is not a good one in terms of performance over the last 20 years. It happened in Europe as well. We have Telefonica, we have other stocks in Europe that experience a very similar performance, Orange, Vodafone. But maybe this is the good time to buy it. After all, the telecommunications sector is like one of the most important and critical sectors in the around the world. It's very important. Like people need internet. So it makes sense. And actually, right now, the performance over the last year, if we include the dividends in AT&T, incredible. From August 2023, we're talking about like 70%. Not bad at all. And actually, in order to understand if it's a good time to buy the stock at this moment, we had to take a look at the financials. And the financials actually is like kind of surprising right here. Obviously, we're watching right here the last quarter. You may think, okay, this is a negative number. You are watching the net income, actually, the chart below. But obviously, it's like that's due to some sort of adjustment. There is always a reason, because in the end, it's going up because, the reported earnings, it was 0.60 and the estimate was 0.56. So obviously, this is like a positive surprise factor. Then you have to standardize and so on and so forth. But the critical thing here is like the revenue is good. And obviously, if we go to the financials to take a closer look, and actually let's see the forecast as well, we have some information right here. Because obviously, the present is good. But what about the future? About the future, I would say, look at the fourth quarter. It's not the best one, actually, in terms of performance. It's actually the worst. At least this is expected for the next quarter, the last quarter of 2024. But still, if we go to the annual chart, it's like we have a stable income in that sense. It's like we are not going to experience much growth, and that's maybe a problematic thing for the future. But at least it's like stable, and that's important. When you're buying a dividend stock, what you want is like at least this, like an estimate that is according to the past. It's like maybe you don't expect growth because this is like telecommunication sector and growth is very limited in that sense. But at least you have a stable income. So even if you have a crisis, you know that this company is going to perform very similar in that sense. Maybe a crisis is gonna affect a little bit. But people need internet. As I said, it's like they need phones and so on. So it's not gonna change dramatically in that sense. And the same for the revenue. The EPS and the revenue, the estimates are very similar. We have like a stable income, a stable forecast. That says we're not going to experience much growth, but at least it's going to be stable. Obviously, we take into consideration the numbers in the past. In 2018, 2019, you may see right here the estimates and the reporters, and they were targeted at that time. But still, look at that. It's like there is no much difference. That means they change, and they optimize the resources they have. And then another interesting factor right here, the price target. We have 23 analysts from Wall Street, and what they say is that the average is plus 2.51. And that means, they expect not much growth in that sense in terms of price. And then we have pessimistic vision of one of them, minus 41%, so it could happen. Right now we have mixed opinions. Like half of them, they think it's a hold. Another half, they think it's a strong buy. You take into considerations their opinion, maybe you can still buy it, But the thing here is like you have to follow the trends. In a sense, the fundamentals are good. They are stable, and that's good. But obviously, I would say right now the technical analysis is more important than the fundamentals, because the fundamentals, we don't see any danger in the coming future, you know. But the thing here is like the trend that we're experiencing right now, and the trend is the trend, you know. It's like we have the dividend activated, so you may see the chart a little bit different, but look at the trend that we're experiencing right now. It's like the first trend is right here from July 2023. We have a support level right here in April 2024, and look at that, it just went up like crazy, you know. And then we have the second uptrend. It's completely out of control, you know. And this is a very interesting factor, because look at that, we are trading new highs, you know. It's like when people were trading this stock back in July 2023, it's like people were thinking, okay, this is like a shitty stock, it's not worth anymore, I'm not getting any money out of this. But look at that, you know, the upturn of 70% changed everything. And this is the thing with dividend stocks, you know. It's like right now we have a 5% of dividend yield, and you have to activate it. It's very important, you know, they activate the dividend in the chart. This is all available on TradingView, maybe other platforms. We have here on the right corner of the screen, on the bottom right corner, we have a text, you know, like a little text with ADJ. If you click on that, you activate the dividend, like I'm doing right now, you know. And that's important, because that way you analyze, and I recommend you to do that, to analyze dividend stocks with that thing activated. That way you can actually analyze the whole performance, you know, because you're buying for a dividend. And that's the thing. And look at that, you know, for the long term, we have support level right here, because when you analyze it with the dividend yield activated, it's a completely different story. And this is the support level that we have right here. We are very far away from there, and this is maybe one of the danger situations, because buying at the top right here is kind of complicated, you know. And right now, if the performance in terms of net income is stable and it doesn't change much, it's good. But if we see something like a drop in the negative surprise factor, for instance, in the next quarters, the stock should fall, you know, according to that, because they know right now the price is a little bit higher, a little bit, you know, overestimated in that sense. So this is one of the dangerous situations. That's why I recommend to use the RSI and MACD. And right now we're watching here these indicators. Let me see. You know, they are confirming exactly that. You know, the weekly chart, and it works. You know, the simple strategies really work, and this is my recommendation in that sense. Obviously, this is my opinion. But if you see the RSI and the MACD, we are in completely overbought territory, and that's the danger situation, because when we are analyzing a weekly chart, you know, we have data from 1994. And with all this data, we activate, for instance, the logarithmic scale and the MACD and the RSI. We're watching it right here. And you can clearly see right in here that this is the more dangerous situation, because over the history in the MACD, usually look at the updates. Maybe this one in 2006 is like, it was a long one. Pretty sure in 1997, 1999, there was another one. Apart from those, these uptrends are very short in that sense, and we are experiencing right now one of those in that sense. You know, if we compare the data, we can clearly see they don't last too much. And right now, you buy the stock and we see like bad earnings, something like that, it's gonna drop dramatically. You know, based on past experience and past performance, and on the RSI as well. Look at the peak levels right here. You know, right now buying the stock at these particular levels is very dangerous. A different story would be like if you are holding the stock. If you're holding the stock, you have to follow the trend until it finishes. So when is a good time to sell the stock? And this is an important factor, because when to sell at this particular point after experiencing a rally of 50, 70% is difficult. But obviously, you have like a bearish divergences, I would say, in the MACD, for instance, like let's activate it again. We don't have it right now. That's a good thing, you know. At least in the weekly chart, but in daily, wow, in the daily it could happen, you know. It's like when we have like price drop right here, it's making new highs, but then we have like a drop in the MACD. It's signaling like a bearish divergence. It's not completed yet, so that's like it's okay for now. But if we see, like, for instance, this line crossing over the yellow one again below, that could be like a bearish divergence, and that could be very dangerous in that sense, you know, because the first signal will be this one, and then a breakout below $20.73. if we have a breakout that right there and it continues to go down, the correction should be huge, you know, according to past experience. Look at that, you know, when that happens, like people, they don't want to hold a dividend stock, you know, when it's suffering a lot, because you kill all the performance, you kill all the dividend performance. So obviously you have to follow the trend with this ADJ activated, so you can see exactly the performance in the chart. And this is like one of the good tips, you know, like the final thing I would say is like follow the trend, and when you see the breakout, realize the profits, you know. It's like you don't have to hold this forever, because look at what happened in the past, you know. It's like you could get trapped in this stock, and there are situations here between 2016 and 2023. We're talking about a lot of years underperforming, you know, with losses. Right now you are in gains, but you have to hold the stock like 7 years, 8 years. That's a lot. That's why you have to follow the trend and sell it at the top, you know, not holding it like for a long period of time. So thank you very much, guys, and see you in the next video. Also, we have the seasonals, you know, because this is like, I wanted to show you this as well. Let me see if we have it. Yeah, over here, exactly. So here we have the performance of AT&T over the last, let's see, 2009 till today. We have all the years right here. And the best year was like 2016 with a performance of 32%. No, this is not the performance actually. Right now, this is the performance. 2019, 32% performance. And 2024, this is the second best year in the last 20, you know, and that's another important factor, because right now we are in the second best year, and you don't expect much growth from this level, you know, because the first year is like 2019 and it was 32%, and we are now at 28.72. So like the growth is very limited in that sense, and the risk is higher, you know, according to this chart. If we go even, you know, even to 1993, 1994, look at that, you know, it's like we have the best year in 2006, 44%, 1998, 43%. So this data is important, you know, to assess how much growth is left in this stock. Maybe the best could be like 10% more, but that's like the best estimate right now, you know, based on 30 years or more of performance. So thank you very much, guys, and see you in the next video. Leave your comment below about this dividend stock. What do you think? Is it a good buy or hold or sell? Bye bye.